We now move on to our first panel discussion of the morning, entitled The Future for Financial Services in Ireland and Europe. I would like to invite the participants of this first panel to the stage. Sharon Donnery, Deputy Governor, Financial Regulation, Central Bank of Ireland, will chair the panel, and she is joined by Brian Hayes, CEO, Banking and Payments Federation Ireland, Oliver Gilvary, Assistant Secretary, Department of Finance, and Carol Lanou, CEO, Centre for European Policy Studies. Welcome.
Well, Díomh and Fáilte Arash, welcome back. Thanks for joining us again, and welcome indeed to those who've joined us for this panel, which, as Denise said, is themed around the future of financial services in Ireland and Europe. And I think we're set up already, I think, quite well, hopefully, for the panel in terms of what we've heard about this morning. We've heard already a little bit about the global context and the changing geo-economic and geopolitical landscape for the world and for the economy, and also for financial services. We know, of course, that we have the incoming EU Commission, and the President of the Eurogroup mentioned some things that he saw there as priorities for the incoming Commission, and we heard a little bit also about the Draghi and Letta report, which I think are very much going to set the context there. And of course, we had the former chair of the Basel Committee, Pablo Hernando de Cos, earlier commenting on some of the issues around global regulation in the current challenging environment, and this issue around competitiveness and regulation and so on. So I think we've very good context for the panel. And let me start maybe by asking a couple of questions about that current landscape, and I'll start with you, Carol, if that's okay. So we've heard about this changing geopolitical and geo-economic landscape. So what do you think really needs to be prioritised in the coming years for the EU to maintain a resilient and competitive economy into the future?
Okay, thank you. Pleasure to be here. Pleasure to be in Ireland and to speak about this theme. Of course, I come from the Brussels bubble, and sometimes if you're in that bubble, you don't see well. Say it's rather cloudy in Brussels as well, not only in Dublin. You don't see really well what are the priorities, but if you look a bit around, a bit further than Brussels, you see there are, quite some urgencies which we need to address at the European level, but it has to do with our place in the world. What we need to be aware of is that we have lost our reputation, certainly because of geopolitical conflicts over the last years. And as the governor was also saying, in technology field and innovation field as well, we have to be aware that we are no longer this leading group of countries. There are other countries around the world which are bypassing us and which are becoming much more competitive. Let's say, so our standing globally has diminished. So that we need to be aware of, very importantly. And many people outside Europe do not look at Europe as one single political bloc. It's seen to be France, Germany, let's say the larger countries. It's not the EU. And if you go, for example, to China, to India, and so you will see little of the EU. It's mostly member states. So EU outside Europe is not so well known. Secondly, we've got sluggish growth over the last 2-3 years. You've certainly heard this. We've heard it, for example, also in the Draghi report. But just remember one figure. We've got over the last 5 or 6 quarters as much growth as the US in 1 quarter. So it is so critical. So we are far too complacent with the level of growth, which is basically far too low. And you always hear, like this weekend again, or was it before the end of the week, that the EU said, let's say we reduced our growth forecast for the current year. We are around 1% or below 1%, but we have to see the US in the last quarter, they had something like 2.5%, 2.7%. And we need to be aware, let's say, that if we want to maintain the system which we have, like what Draghi also said, if we want to maintain also security model, we need to remain sufficiently productive to do that. And there's also been the US election effect, which we've seen, and we've heard, let's say, so surprisingly that Trump has so rapidly already nominated members of his cabinet, and the big mantra will be deregulation. Imagine, deregulation from a country like the US, which is already fairly deregulated, certainly compared to the EU. So what a pressure this will be for Europe. But put this into another perspective. If you think about things I follow, like banking union, capital markets union, which we'll mention this morning, I think sometimes, again, it has to do with complacency. We think we do these things, but we don't deliver. Like capital markets union, we speak about this not only since 10 years. We speak about this since at least the end of the 90s, 1999, 2000, when we created single currency. There was momentum, for example, at the start of monetary union to create a more integrated capital market. There were, initiatives taken at the time, but we didn't use the momentum and we didn't jump upon it to say, no, we will do it. No, there were all problems, let's say, why we couldn't create a capital markets union. In the meantime, we lost out. If you still remember, say, that early period of 2000, 2005, 2006, that period, Europe was almost at the same level of the US, and in the meantime, we lost out. Of course, we know what happened in the meantime. We had a huge banking crisis or sovereign crisis, then we had the COVID crisis. But again, I think we were a bit too complacent. And then also about Europe and the member states, this is this tension which you have in Brussels all the time. I think we have to find this balance, what is the responsibility of the EU and what is the responsibility of the member states. And there is, I think, far too much from the member states gold plating. So we have European rules and they come into the member states, and then member states start to argue about this again, say, no, this has to change and this should be added to our rules. And you create this, certainly in financial services, this unstoppable process of gold plating, new European rules, new gold plating, and so on. And in the end, we have such a over-regulated financial system that's become very uncompetitive. Not only financial system, you can speak about it also in the domain of green economy, in the domain of probably digital. We have to be aware that we have a system originally in Europe which was created to have minimal harmonization and mutual recognition. And I think we have somewhat forgotten that. Let's say that in a single market, by the way, which is the case in the United States, you have states. States are also jurisdictions which have their own rules, but there is almost a perfectly functioning mutual recognition. I gave, for example, the example of Musk when he didn't get his bonuses approved. He moved his company in a matter of a few days from Delaware to Texas. Would the same thing be possible in Europe? Even if this was the model which we have taken for Europe to create a single market, fully functioning mutual recognition that you basically can move around in the EU with a single license everywhere. So what I see as the priorities for my part, let's say for the coming years, is on the one hand more, and on the other hand less Europe. And that is, of course, the second part is difficult to say, that sometimes we have to abstain from regulating and let the markets function. But in certain areas we need to have more Europe, and of course the ones like foreign policy, security policy are very important. Also regulating our economy are important, but we need to restrain sometimes and ask ourselves, is it really good that we have these rules or this structure in place? Because if you look back, and we published a report on that, which is on our website, which you can download, only in the financial services domain. What we've done over the last 5 years, it is just mind-boggling. We have a table in there, let's say, with the whole list, also in the digital domain, because as we were just discussing, the digital domain overlaps with the financial domain, the green domain, the tax domain. It is just enormous. And a person I met briefly this morning before coming here was also still complaining about all these rules and how difficult it is for a bank to absorb all these rules in their systems.
Okay, thanks very much. So interesting views there on this kind of idea also of more and less Europe, depending on the area that we're in, and we might come back to that in a few minutes. So Oliver, maybe thinking a little bit more at home, we're obviously a small open economy, we've a globally oriented financial services sector, as well as our very important domestic sector. So maybe you could say a few words about how this sort of overarching big picture has affected some of the work that's been going on in the department over the last number of years. So you've done a number of reviews, for example, of the financial services sector and what that means in terms of the priorities and the work that you're undertaking in the department. Yeah,
thanks Sharon, and thanks for the invite today. I think I'm somewhat restricted in what I can say with the general election campaign underway, but I think it is worthwhile just on this issue, kind of the point of the changing global landscape and the focus on a competitive economy. We in the department have been working on a number of reviews over really the last 2 years, and one that kind of the first one just to mention was in relation to the banking review, which it was myself and John Palmer were involved in. But even on that, we looked at what changes needed to come there for a competitive market here, particularly with the changes that we saw with the exit of 2 entrants. And I think we've seen a lot of the work on those recommendations been progressed over the last 2 years. Some of them that were here with the Central Bank in relation to the Consumer Protection Code, what we see on kind of branches or changes coming through there. But even I think looking at the cooperation between the Competition and Consumer Protection Commission and the Central Bank there in relation to the issues that are facing on the consumer and the competition side of the market. So that working together, regulators. So I know what Carella is talking about, more regulation and, some of that, and we have to see where the US go. But I think there is kind of, we see from some of the reviews we have done that there is ways to kind of making sure we get the most effective, in essence, effective bang for our buck out of that. And I think importantly then that fed out of that review as well is in relation to financial literacy. Because we can talk about the changing environment and how we're competitive, but financial literacy is and financial inclusion is hugely important to kind of, as we'll talk about later on, about the savings and investment union. We can talk about that, but we need to get people to engage with it. So that was a recommendation that came through and that the department is leading on. We have a mapping report that was completed earlier this year. One thing we have found with that whole work is the interest or the amount of activity that is underway both by the public and private sector to increase the level of financial knowledge in the economy and in the system. But I think as well, we had our event in Cork. Some people will call the real capital, but I think we'll have to see.
Certainly not. Let's not get carried away.
But the draft strategy, or that again, we had 91 both public and private entities coming there, bodies engaging on that. And I think that is something that we'll see when the strategy is completed later this year. And then we have the steering groups, and just to acknowledge the work of the Central Bank and the CCPC and that, and our governance frameworks, which both organisations will be involved in. That will be something that will also help competitiveness. It's not something that's thought about a lot as from a competitive side, but getting people more knowledgeable, that they're more confident in engaging in financial products, that ultimately will help the economy overall. And then linked into that, more recent one then is in the National Payment Strategy, where we set out the roadmap for the future evolution of payments as well. Again, another part with the rapid change that we're seeing coming through at a European and international level to see what we can do there. And some of that, though, is kind of some of the parochial stuff. The issue of cash acceptance, choice and access, the concept there, but making sure that people see that the system is working for them. And I think as well, at the competitive side, there is the issue, we're seeing all the innovation coming through, but the issue on fraud, and one of the big recommendations coming through there has been on the forum, but with the regulators working together. And I think I would come back to the point as well, having regulators and industry in a room together helps you deal with the issues and move things forward. And I think that will be hugely important in relation to the fraud, building on the work that BPFI and other bodies have done in this area, working with the regulators. And all of us in this room a lot of times think about regulators as the central bank, the CCPC, but where we're seeing the kind of the trends going through, the social media companies, we have Commission Demand, we have others now, which are becoming more important because of the interlinkages between in essence, the social media, and we'd have AI coming through, and the regulated system. And then just to kind of finish as well, the funds review, which completed, was published there in the last couple of weeks before the government, before the Oireachtas was dissolved. Again, a number of recommendations there feeding into the, linking into the Saving and Investments Union and how we can get retail investors more involved in investing, which again benefits the economy. And not only this economy, it does come back into the point that we are part of the EU system. So what we do here also does have, while we're small, it does have an impact. But we're a big financial services sector, so we do benefit as well if we can see that Savings and Investment Union being developed for the benefit of all of Europe and for us here.
Yes, I think this idea of regulatory cooperation is really interesting. So obviously we heard from Pablo Hernando de Costa earlier about global standard setting through the Basel Committee, for example, or through IOSCO. But I certainly know at European level as well, as we look at, for example, the ECB, the SSM, the ESAs, the forthcoming move to set up AMLA, the new anti-money laundering authority. This whole issue, I think, of closer regulatory cooperation, supervisory cooperation is also coming more to the fore, so we might come back to that in a moment. So turning to you, Brian, in terms of maybe an industry perspective, I think it's really interesting actually if you look at the membership of the BPFI. In a way, actually, it's a representation, I think, of some of this changing nature of the financial system, because you have maybe the traditional domestic players, you have the big international banks that we have here now, you have the non-banks now, members of the BPFI, and of course this move, as Oliver was describing, also into the whole payments area. So if you look across that landscape, and indeed even more broadly into the financial sector that we have here in Ireland, what do you think are some of the risks, but also maybe the opportunities from this changing kind of global landscape and some of the big shifts that we've been talking about that are happening?
So thanks for having us, Sharon, and it's good to be on the panel. And you recognised from our perspective as BPFI We have, as you rightly say, SSM-regulated banks, banks that operate as LSIs, non-bank lenders, fintechs, big and small, payment service companies. So we're very conscious of that very rich and diverse financial services sector that we've built in Ireland. And I suppose the first risk, none of us should take that for granted. This is a sector that is worth, in terms of direct contributions to the state, over 7 billion a year. It employs 120,000 people. In recent years, a third of all new jobs are outside of the Dublin area. It's a very strong growth developer in the Irish economy. I remember I was in government at the time in the early 2011 period. Even at that time, new jobs were being created. So we can't take any of that for granted. We operate in a very diverse financial services sector. It's the 5th largest financial services sector, and it's a challenge across Europe, and it's a challenge for the central bank to manage that as well. And I think what firms want to see is clarity on regulation. We're not in favour of divergence. And I think if you look at one of the biggest risks right now, from a geopolitical perspective, is divergence. We've gone through Basel III, we're implementing Basel III, and yet we're seeing some regions of the world potentially not going in that direction. That's not good for financial stability. It's not good for the sector, because we want clarity in all of these issues when it comes to that. We seem to be operating increasingly in a world where those things like the WTO, like the Basel Committee, like IOSCO, increasingly where it's more fragmented. The governor spoke earlier about the risk of fragmentation. He's right, but I think our response in a European context must be about a more harmonised, integrated market from a financial services perspective, taking out the gold plating that Carol mentioned, the home host stuff. All of that leads to fragmentation, frankly. Of the top 25 banks in the world, not one of them is in Europe. We don't have market capital size. We don't have balance sheets with the size of the Asian banks or the American banks. So how are we going to do this new lending? How are we going to actually recreate the kind of capital composition and the capital intermediation unless we have banks of size and scale? We've had the whole debate, we spoke about it before we came on, Carol, about what's going on the Commerce Bank stuff right now. We need European champions. We need an M&A agenda, I think, at a banking level to give us the firepower to have real significant banks of scale. So, to take Carol's point about delivery, someone said to me once, and I was in Brussels in a number of roles for a while, someone said to me once, Brussels is a bit like the Mississippi, it just keeps rolling along. And what we've got to do as we approach this challenging period is, 1, integrate more, but 2, make sure that we are looking after European unity in a circumstance where we're seeing such fragmentation in other markets. Jose, another risk, Jose Manuel Campa, who's head of the EBA, he's speaking at our conference on Wednesday, by the way. It's just a bit of a plug for our own conference. He gave a really good interview in the Sunday Business Post yesterday. He recognised one of the biggest risks is around public authority risk, arbitrary decision making from public authorities, because banks need certainty. Financial services industries, be they payment service companies or whatever, need certainty. I was very interested by that remark he made yesterday around the risk of public authorities and how that actually spooks investors. And maybe the last risk, sometimes we're fighting the last crisis rather than thinking about the future. Yes, the great financial crisis was a terrible thing across the world and especially in Ireland. But we do have to move on from it. We need banks. They're the fundamental capital intermediaries in the Irish economy, the Belgian economy, the Dutch economy, across the Eurozone economy. And we need to move on from that in a circumstance where I think a lot of good work has happened on capitalisation, on liquidity, and the reductions of non-performing loans. Really super work, I think, has happened from a regulatory perspective and from an industry perspective in making sure that the kind of nuclear reactor that the banks can become never happens again. So we've a lot of work to do there. And maybe just very briefly on opportunities. I mean, climate finance is a fantastic opportunity for the industry. We've seen a lot of really good novel products from our own pillar banks here in Ireland coming forward. Even our wholesale international banks, most people don't know this, but a lot of the next generation and EU sustainability bonds issued are coming from Dublin by US Canadian banks operating in the wholesale market. A really important thing that third country banks who operate in Europe can actually add to what we need to do at a European level. So that's an opportunity. Obviously, securitization, covered bond legislation that the department are working on is a good opportunity. We also need to leverage against the significant digital presence that exists here in Ireland. We have some of the largest digital businesses, tech businesses, and that's a fantastic ecosystem for finance and digital. Yeah, there are risks around that, but equally, there's great skill here in Ireland because of the presence of large businesses there. And maybe one point that Pablo raised earlier, I was very interested, he spoke about AI, risk and opportunity. And we've spoken before, Sharon, about the ECB and novel risks. You know, anyone who works in a bank knows the banks are absolutely full to the gill of models for this, models for that. But how do you actually model a future risk or a risk that's emerging? You know, when we talk about capital now, it's an internalized or standardized model. Even risk-weighted assets look to the past. And if their only response to deal with the novel risk is around more and more capital, that immediately has an impact on the capacity for the banks to lend. So I think we have all a real journey to go on understanding novel risks into the future, given the fact that we've done such good work on capital and liquidity and non-performing loans.
No, I think this is a really interesting issue, and I know that at the Central Bank of Ireland, but also I'd say more generally at European level, you know, a big debate now about both financial and operational resilience, and not only the financial aspect, but also the operational aspect. And certainly at the ECB, where some of you may have heard about this so-called SREP, Wise Person Report, which is the review of the supervisory review and evaluation process. I think this point that you make, that capital, of course, is very important, but there are other tools in the toolkit that we need to look at for some of these other risks, is also a key feature of that. I was very interested also in what you said about divergence, because I mean, I think as regulators and supervisors, we hear a lot about that. I know the industry talks about that a lot, but certainly in the context of the current debate around Basel, what I hear a lot more is about concerns around uncertainty and exactly that need that you mentioned about predictability and knowing where that's going to go. So we heard about the Mississippi rolling on there, Carol, so maybe back to you in Brussels, in the bubble that you described earlier. One of the top things that's going on there at the moment is the confirmation hearings and the establishment of the new EU Commission. We've had the Draghi report and the Letta report, which are the background, I suppose, to the strategic priorities for the Commission. And you mentioned how maybe we've had ideas in the past, including we've talked for many years about Capital Markets Union, for example. We've had lots of discussions about Banking Union, but still a lot of work to do. So in light of that debate, what do you think are the real priorities that should be focused on in terms of the next Commission, and how they might, I suppose, shape the overall framework for financial services in Europe for the next few years?
Yeah, it's a bit, thank you, Sharon, a bit early days to say what are the priorities. Of course, we've got all these reports, and for the group, let's say here, probably should remind you, let's say we had a council which had its reports, the Commission had its reports. We basically had the first reports was from the Eurogroup, from Donoghue, whom also this morning. Eurogroup had a report, and they say focusing a lot on Capital Markets Union and saying, look, we have the A, B, and C of Capital Markets Union. We need to focus on integrating markets, integrating infrastructures, and also bringing consumers on board. I think for me, one of the most important elements of that report was we need to have a cost-effective long-term savings product. That for me was very important, and a very important sign that we don't have it. They were also the first to mention this. Then we had the Letta report, which was published, I think, somewhere end of April. So the Eurogroup report was in March, then the Letta report in April. Don't forget that the Letta report, I think, also was very important, because I've heard Letta speaking several times, saying very clearly, for me, financial services is the most important sector where we need to make progress. So he basically did kind of an overall overview of where are we with the single market, and singled out 3 sectors where we are behind: financial services, energy, and digital. But imagine financial services as compared to energy and digital. Energy and digital, certainly digital is fairly new. Energy is not a clear EU competence alone. There's a lot which is up to the member states, certainly supply of energy. Financial services, we've been speaking about this since almost 40 years. And we still have to signal it as a priority. So that alone for me, and I've been following this for a long time, that we still have to insist that financial services is so important and that we have not created a single market in financial services. So to some degree that could signal we need to have another wave of regulation. I would say please not, make sure it works. And that's why I think we need to go back somewhere to basics, and these basic principles of the single market, mutual recognition, and basically harmonizing essential rules, but accepting the system which we have, because otherwise we will go through the roof. Apart from the Letta report, there was also the Noyer report. Of course, Noyer was not a report of the Council, it was a report of a member state, France. But Noyer is also, I think, has got quite some influence because he signaled another issue, another proposal to integrate markets, which was the 28 regime. Why not have, if we have, let's say, all these different 27 countries which have their own system, to integrate, above all, capital markets, a 28 regime that you can ask to be supervised directly, in that case, I assume, by ESMA, European Securities Market Authority in Paris, for example, debt issuance, for equity issuance, rather than be supervised by the member states, to be accepted all across the EU. This is still a very preliminary proposal, but it is there and it's widely discussed. You also need to know it's the mandate of the Commissioner for Justice Affairs. Yes. So it's not on the list of issues which has to come under the mandate of the Commissioner for Financial Services, but for the Justice Affairs Commissioner, which for me creates already some confusion because Justice Affairs, you think about a single regulatory regime. For Noyer, it's a single supervisory regime. So whether that distinction will be made, I don't know. But then the Commission had its own report, of course, the Draghi report, and I don't know whether many people have read this report because it's a very lengthy report. But the big thing of the Draghi report is that there is not one single positive message in there. It's all basically critical, negative about Europe. Really, read it, try to read it, and find a positive message in that report. You don't find it. Of course, they say, as I said already, we need to keep our social system, but yeah, for that, to keep that, we need to be much more productive. But Draghi didn't say too much about financial services, more at the end, about also integrating the back office, which, by the way, also the Eurogroup report said, about having, a single capital market also, he said very clearly, but it was much more focused on the manufacturing sector and on the fact that we've lost out in Europe internationally. And then there was also the von der Leyen speech, her acceptance speech in July, where she said, many different things, not so much on financial services, but the clear thing she said on financial services is that we need to have this much more deeper and liquid capital market, she said very clearly, but also she announced there that Capital Markets Union would become Savings and Investment Union, which, by the way, also comes from the Noyer report, because the Noyer report is called the Savings and Investment Union, which is now a bit of confusion you have in Brussels. We will rename CMU SIU. What will it mean? For me, yeah, already we in the past argued as a think tank, change the name from CMU to something else, but now we have it and we're not entirely sure anymore. So whether it's good to do that. But a Savings and Investment Union means basically, as was said also already in the previous panel, that we need to have a single savings product. But try to structure a single savings product, because as we were saying, who was speaking about this, about the pension systems. Our pension systems depend on national social security, on tax systems and so on. And then we would try to create a single savings and investment product. And we tried this in the past, by the way, you know it very well in Ireland. We have UCITS, of which there are far too many. We have something like 36,000 UCITS, unit trusts in Europe. We have started to try to create a PEP, a personal European pension product, which has not succeeded because we have one company which has issued a PEP, and that exists since 5 years. Imagine the cost of a regulatory process. And we have then LTIFs as well. LTIF is the less liquid long-term financial savings products, of which there are something like 114 only over 10 years, with a total asset size of 11 billion, which is not a lot. So I challenge whether we will manage to create that kind of long-term savings product. And probably I would link it to another issue which is also coming up in the von der Leyen speech. Of course, we still don't know what the Commission program will be for the next 5 years. That will only be announced probably after the Commission is formally inaugurated, which may be end of this month or end of next month, and we will see it in the next 100 days. Then there will be a formal program. But von der Leyen also spoke about this, the need for a public investment fund, which was addressed before, and there we can use, if we have a better long-term investment fund, this long-term savings for. But she also spoke about affordable housing. and that the EU should help to have affordable housing in the member states, which I personally found very strange, because housing is a social responsibility as a member state's responsibility. But this is in there because everybody thinks about the US system, where we have a kind of a big Fannie Mae, Freddie Mac, which back up the housing system of the member states. So that is in there, but still very exploratory, but there is a commissioner in charge. So there may be issues on the long-term savings side, which the next commission will explore.
Yeah, and of course housing a huge issue here domestically in Ireland. I'm very interested in you mentioning the 28th regime, because of course the Commissioner Designate with responsibility for the 28th regime will be our own Michael McGrath. So we heard a long list there, Brian, of maybe potential things that could be on the agenda for the EU Commission. So I suppose taking an industry perspective, and looking at those strategic priorities, what would be the key things, either changes or initiatives, that you would see as being of greatest importance for the industry?
Well, firstly, can I say Marie-Louise Albuquerque is the Commissioner Designate for Financial Services, and assuming that the vote goes through, I think she'll do a super job. She was a former Portuguese finance minister. She also was Secretary General in her own Department of Finance, worked in the private sector as well, so has a deep commitment, I think, to try to move this agenda on. But of course she needs partners in the Council, and as the Commission do, because it's a very ambitious programme. But we should recognise, I also want to recognise Mairead McGuinness and the work she did, Sharon, over the last number of years. What's important for the industry, we want to see banking union completed. EDIS has been around for a long time. I know the German view is that risk reduction and risk sharing should go hand in hand. But we have two stools of banking union completed, really, on the supervisory side and on the resolution side. We do need to make progress in EDIS, and that's something that the industry broadly supports. On CMU, obviously securitization, this will be our third attempt to get securitization right in the last decade and a half. If the Commission bring forward a new proposal. We have a lot of experience here in Ireland on securitisation from a legal perspective and a banking perspective. So I think we're well equipped if we begin to see some improvement in the marketplace emerge after a proposal, but that's something we need to see. Once again, Mr. Campa spoke over the weekend about solvency rules, insolvency rules rather, and the fact that we have very different approaches jurisdiction by jurisdiction. And what can we do? The Minister spoke earlier, very interested, the kind of difference in Sweden, the Netherlands, other Scandinavia countries around what they did to provoke investment there and utilise capital markets in a way. I think we need to look at some of those examples that have happened. We do also think that a stock-taking exercise on ESG and taxonomy needs to occur. And the Commissioner Designate spoke about this in Parliament, I think last week, where she spoke about how we could look again at sustainable finance disclosure regulations from the perspective of better labelling. We have to make it clear that those companies or those individuals that are in the middle of a green transition, we have to recognise that within banks' balance sheets as well. And I do think we did a lot in this area in the last number of years. Some kind of stock-taking exercise would be important to ask ourselves the question, what's working, what's not, what do we need to improve, particularly from a bank balance sheet perspective. Some of the challenges around data on our side, getting data from public authorities, getting data from SMEs who won't give it to you. How do you properly assess a bank balance sheet in a circumstance where you don't have readily identifiable data? And so we would welcome some kind of stock-taking exercise which could focus on the things that we need to do, because we are absolutely critical on the transition side. So there's some of the priorities we'd like to see, Sharon, from the perspective of the industry as we go forward. But I mean, critically, we are part, the banking industry in Europe is absolutely critical on sustainable transition and critical on digital innovation. We have to be at the heart of that. We're part of the solution, and we hope as we go forward over the next 5 years with the new Commission and with the new Parliament, we can come up with solutions that work.
Yeah, Thanks very much. And that insolvency issue has been one of those intractable
Yeah.
ones that Carol mentioned, and going back to even when we were working collectively to try and deal with the non-performing loan issue after the great financial crisis. So I'll come to Oliver in a moment with a very brief question, but just to be alerting the audience to get ready with your questions, and if anybody wants to submit a question online, I have the iPad here beside me. So Oliver, I know you mentioned earlier, obviously we're in the middle of an election cycle here at home, but just on the priorities for the Commission in terms of financial services or the whole issue of savings and investment union or other priorities, anything you want to add there from your perspective?
Yeah, I think as what the Commissioner designated, I think when you look at the hearing, it's quite clear, as we've kind of been talking about the different reports, the Letta and Draghi report will be key influences on her, term in as Commissioner. And I think though it is kind of one point is there, like in our hearing, she was talking about the deregulation. Now, as a person who worked in the central bank and a person who's worked as a government official, we do like rules. So I think coming back to Brian's point on Mississippi, water flows downwards. It will be interesting to see how that goes, and we can be circumspect about kind of a deregulation, not deregulation, but kind of getting rid of red tape, I think is the phrase she used. But I do think we have to be conscious of where the US, we do have the decision in the US, what they call the Chevron judgment in relation to the ability for agencies to make new rules. We'll have to see with the new administration as it comes in January what way it goes. But that could be a pressure that the Commission will and the Commissioner designate may have to face on that. And it does come back into Brian's point there on where we go with the BAL committee, CRD6. I think we've had certain member states out saying, look, do we need to relook at this? But I think we're just going to have to see how that goes in her term, and what other. It does raise a broader question. What do we see at the kind of multilateral agencies as well, and how that goes, and that will feed into at a European level. But I think looking at it, we're going to see some things in relation to settlement, kind of quite a technical one, this T+1 settlement issue that has been talked about. Tokenization, I know the Governor mentioned that in his opening address. What we're going to see there, we have done different parts in Europe in relation to my car and everything, so it does highlight that whole issue. On the fintech digitalisation is all coming more and more into the regulatory remit. There is frameworks been put on top of it, so it is becoming part of our world, and it is getting a stamp of oversight at the very least by regulatory authorities. So that is something else I think that will continue on. Climate will remain there, AML sanctions as well, and the securitisation. And I think I do take the point that this we've done, I think I was involved in the first one in 2015 on the negotiations in Council. This will be the third go in relation to securitisation, and we always have this discussion about how do we reinvigorate, or how do we invigorate the securitisation market in Europe. I think there is, if you stand back and look at it and we compare, there's still constant comparison to the US, which doesn't really work when you see the level of state support that goes in there by the government-sponsored entities. There is some numbers that does look out there that when you strip out the GSEs in the US, and okay, you can argue, including covered bonds there, which is, very prevalent in Europe and here in Ireland, that the market isn't that much of a difference between the US. But it is something that we'll have to see now. We, from an Irish perspective, we have a lot of securitisation structures here. It will be something that, again, that would benefit, but we just have to see with where the Commissioner designate goes on that. And just a couple of other points. I think the other issue is, the Draghi report talks about 750 to 800 billion euro a year that is required for additional investment. I think about 20% higher than the current level of capital investment, or investment in Europe. The financial services sector is, as Carol, everyone says how important it is. It is hugely important. It is hugely important for the climate transition. It is hugely important for the competitiveness and drive competitiveness in the European economy and productivity. And I do be maybe a little bit more positive. The reason that we keep looking at that over a 40-year period is because it keeps changing. And it is hugely key to all the other aspects, whether, as I said there, on climate, that money has to come in. It can't come from the public sector it has to come through from private sector. And that will be hugely important, and for the incoming Commission, how we develop out our capital markets in investments. And I think I think looking at UCITS and ETFs, Europe has created these products in the past. and I would say AIFMD as well, which only came in 2012. 2011, 2012, those are products that are in place. They're European frameworks, and they are mechanisms for us to basically, in essence, bail in private capital to deal with the challenges we're facing in Europe and globally. So I do think, I'd be a little bit more positive than that we've never developed. We have developed, and UCITS we always say it is internationally and is globally identified, and our ETF market as well. And I think as well we can be very down on ourselves sometimes at a European level, but I do think even looking at what we have done in AIFMD in a European, and we've done the review of AIFMD, and then we're moving into the transposition phase now after it's been agreed by the co-legislators. Even on the macro Pru, we have to remember 2012 was when we brought in AIFMD. We have the leverage requirements there, the increased reporting. Again, I was in the central bank back in, when we had a lot of this debate, and the non-banking has moved on. We used the phrase shadow banking. We've moved away from that. It was very kind of early stages, and now we're in a situation where the Financial Stability Board, a lot more data collection, a lot more frameworks. We'll have to see where this all goes, but at least there is a more informed debate than where we were, and Europe was very much in the forefront on some of that with AIFMD. So I do think we can knock ourselves sometimes, but I do think there is a lot of positives. And I think the other issue, kind of coming back into the point I made there, just on where we see the US go, is kind of on divergence. We may come to this in I think in the last question. The divergence. One thing about divergence internationally, we can't have divergence within the union, and it is key. And it's one point that we always make, is the single rule book and the harmonised application of that rule book is usually key, because if we're not going to do, if Europe can't do those basics, we're not doing them right, we're not going to build and get that investment in, or bring the measures in that Europe then increases the productivity, increases its competitiveness, and attracts the inward investment that we need.
Very good, thanks very much. So we're very pressed for time. I can see this clock counting me down to the next panel, but let me see if there's a quick question from anybody in the audience before we wrap up. No? No burning questions, no? Okay, there's one here. Yeah, thanks. We got a microphone. We'll take this question and then we'll try and wrap up. Thanks.
Thanks. Donald Cullinan, I'm Director of Insurance Supervision in the Central Bank, and I will be at least until I ask this question. I know, it's in jest. So I wanted to ask Carol, I was just interested when he was talking about the history of how we're talking about the same things for decade after decade. And one thing that struck me was, when you spoke about that, there's a correlation between that a wee bit, between the European expansion in 2002 and also the number of European commissioners we have, which is a little bit the fault of this country as well after one of our referenda on Europe. Does there need to be structural change to how Europe is governed? That it's this Mississippi, the Mississippi keeps rolling, but we keep on pushing out the banks and extending the length of the river. And does there need to be some sort of structural change to that in order to make the system work better? Thanks.
Thanks.
Absolutely. I mean, if you remember Draghi in his time as president of the ECB, he was always saying, I've done my part, now it's up to the member states, structural change. His entire report is about structural change. We have become too inert. I mean, and the structure, and the areas which he analyzed a lot, for example, manufacturing sector, the car sector, innovation, lack of innovation. I mean, many of the things, of course, call for much more Europe, for example, in the whole domain of R&D, but also, I mean, to get rid of inertia which we have. The way Europe has responded to this, and this is something I would like to add, is that Europe has created many new institutions, but I think sometimes Europe is fantastic in architecture. The Brussels people, they just imagine, I will create a new institution for this problem. Boop, they do. And you sometimes see these people here, and yeah, you will have Campo there, for example, EBA. We will soon create AMLA, European Anti-Money Laundering Agency. But sometimes we have to abolish national structures. And that, I think, is important. We have, sorry to say, far too many national competent authorities which are still active to impose, as I said in the beginning, their own rules. I was at the 10 years of the SSM, Single Supervisory Mechanism, the Single Supervisor for Europe, 1,600 people. They were almost all there. There was celebration down, let's say, in the ground floor of the ECB. But then you wonder, I mean, we have added new structures. Have we made it more, I mean, effective, more efficient? I mean, I hear many banks complaining that the SSM has become far too bureaucratic, far too procedural. So we have to be realistic with ourselves. Let's say that we can be very creative as Europe, let's say, to try to solve certain problems, but we need to have more of a single market then. And that's what certainly in the domain of finance we haven't done sufficiently. If I see it, certainly in the domain of capital markets, if I see, for example, we still have, I mean, except not in Ireland, but 26 CSDs, Central Securities Depositories, we should have much less of a back office. Every country has kept its own back office. And of course that creates cost. And ESMA has produced a report about this. Is there interoperability? What does interoperability mean? It means mainly you can settle your transaction in another CSD. It works very difficult. So there is, in the end, no price competition. And who pays the price of the fact that there is no price competition? We, because our shares are settled at too high a cost. So we need to be much stronger as Europe in enforcing the rules, and that's also, by the way, the Commission, DG Comp, not only DG FISMA, competition policy, go to court if we don't get it, but also, by the way, firms themselves need to inform the single market, enforce. I discovered recently that, for example, Euronext is using 7 different licenses in the 7 markets in which they operate. Why is Euronext not using a single license, which was done for them? If you ask them, they say, yes, but the authorities do not want it. I mean, it's not only the NCAs, it's the firms themselves who have to say, I want a single license, and I will use it. But, for example, Euronext then has 7 supervisory colleges for its 7 markets in which they operate. It's the same for the CSDs. The CSDs have all their supervisory colleges. We have far too many superfluous overlapping structures, and we need to get rid of that. If it were to be in the United States, I think they would have skipped many.
Thanks very much. So on that controversial note, so before Karel gets carried away and abolishes all the national competent authorities, which would not be good for the Central Bank of Ireland, I think, though, this issue, of course, of cooperation, even from the point of view of firms, and I think Euronext is an interesting example, is, of course, something that we can pick up later on in the day. We didn't even really get to discuss in detail competitiveness and regulation and some of the trade-offs in the international debate there, but again, I'm sure we can come back to that later on. But to keep us on track, I'm going to wrap up now, and we'll be moving to our panel on payments, and say a huge thank you to my guests and our panelists in the usual way. Thanks very much, everyone.